Well, good afternoon, everyone. It's exactly 1:30. Welcome to our VectorVest webcast. It's great to see you all. We have an audience from all over the world, so welcome to you all. I'm going to be talking about a proven approach to build wealth quickly and safely on the London stock market. It's the most conservative approach in the VectorVest toolbox, but it's produced exceptionally good results with very little work over the last few years that I've been using it. So I've tested the approach extensively up until 2016, back tested it, and since 2016 I've been actually trading it going forward with real money, and I speak about that at our VectorVest webcasts to customers on a Monday afternoon. Okay, so first of all, I have to put up the disclaimer. Although I'm qualified to give financial advice, I'm not allowed to do so because I haven't done a long and detailed fact find. As you know, VectorVest, as I think you know, VectorVest is authorized by the regulator, the FCA. And I have to tell you that in the webcast, I may talk about stocks that I own myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on. And my objective is to show you how to invest with confidence and consistently outperform the market in 10 minutes a day. So that's the objective. Hopefully the output will be show you how to retire younger with more money than you ever thought you could by three things, folks. The first one may seem obvious. First is capital growth. And we want the shares that we buy to increase in value. That may seem obvious. Two is dividends. And if you have the discipline to sit back, take the dividends, and put those back into the mix, it makes such a difference to the outcome over a number of years. Just have a go at that on an Excel spreadsheet. And the third thing, which is really difficult in the UK, is getting extra income by selling covered calls on the shares that you do own. Now, in the US, that's very easy at the retail level. In the UK, very difficult at the retail level because the options market, certainly writing options, is largely illiquid at the retail level, which is us. Very liquid at the institutional level. They write them between banks, etc. So in the UK, where we want to find shares that are going to grow their earnings, and as I'm going to reinforce during the webcast, that grow their earnings safely, and that will be translated, maybe not directly, but certainly over a period of months and years, into the share price. We want to take our dividends and we want to reinvest those dividends into the mix. And that's me. Unfortunately, that photograph, well, unfortunately, the wrong side is 66. That photograph taken 2 years ago, just the Christmas or the December of Christmas 2019, when we could still travel on the floor of the New York Stock Exchange. So my background, I've got a degree in engineering, I've got an MSc in metallurgy, I've got a PhD in applied mathematics, and will come October 2023, it'll be 40 years since I put on my first stock trade. So I've been around the market for quite a long time, and I started to trade in South Africa. I went to South Africa in 1981 from London. I went for 6 months to play rugby, and I played for Transvaal while I was there. And although I went for 6 months initially, I stayed 35 years. From 81, from 83, when I put on my first trade, to October 88, I worked for De Beers, the diamond people in Johannesburg. And in April 1988, I cut the corporate umbilical cord for good, and I've been trading on my own ever since. Done an awful lot of seminars along the way, mostly for institutional traders. And about 10 years ago, I discovered VectorVest, and I first promoted VectorVest in South Africa. And at one stage, VectorVest South Africa was 3 times the size of VectorVest UK. So VectorVest UK asked me to try and do the same thing in the UK. And I commuted for a couple of years back and forward. But for the last 5 years, I've been permanently based here in sunny West London, in Notting Hill. So that's my story. But what we're going to try and talk about, ladies and gentlemen, is the VectorVest system of analyzing shares. And during the course of the talk, I tend to use the word shares and stocks interchangeably. They mean the same thing to me. The second thing we're going to talk about is quite controversial, market timing. And at VectorVest, we believe that there's a good time to be in the stock market and a bloody awful time to be in the stock market. And that's a controversial view, I know, because most of the stuff that you read will tell you that the market cannot be timed. And maybe if you're running a fund with a few billion in it, that is the case. But if you've got a relatively small fund portfolio of 5-10 million even, you can get in and out if you've done your homework correctly with the press of a button. So a really good time to be buying stocks, a really awful time to be buying stocks. And then what I want to try and do is to tie it together into a robust and worry-free investing strategy. The strategy is hands-off. As I say, you have to look at the market 10 minutes a night at the very, very most, and most of the time there's nothing to do. And VectorVest can be set up to do most of the work for you, in that it can send you an email when there is something to do. So let's progress and have a look at the VectorVest system for analyzing stocks. And the founder of VectorVest, Dr. Bartolillo, who would in fact class himself primarily as a fundamental analyst, whereas I would, as a trader, I would characterize myself primarily as a technical analyst. If you're in the property market, and I'm quite sure many of you are, there are 3 words in property, they say: location, location, location. But there's 3 words in the stock market, folks: earnings or profits, inflation in the general economy, and interest rates in the general economy. And if you've been anywhere close to the financial press recently, you'll see the great debate is about inflation. Inflation numbers, both sides of the pond, in both the UK and in the US, and the rest of the world for that matter, but rising and rising significantly. But the central banks of the world saying that this inflation is transitory and is going to go away as a result of bottlenecks because of COVID. And both central banks are sticking to that. We shall see what Mr. Powell says at the Fed powwow towards the end of August, which I think the entire market is waiting on, ladies and gentlemen. So Dr. Bartolillo has put together a valuation algorithm that looks at profits, it looks at inflation, it looks at interest rates, and it puts a value to every share in the stock market every single day. My definition of fundamental analysis, and I haven't read it anywhere else, but it's my definition, is that it's the search or the quest for the true value of a share. And I have a question here. Let's see if I can find it. Yes, John, quite so. VectorVest believes that every investor should know the following. What's a stock really worth? How safe is the earning stream? And then some idea about the trend. Now, the first 2, guys, are fundamental measures of the company itself. And this is a technical measure of the actual share price. My definition of fundamental analysis, I said a second ago, is the quest for the true value of a share. And my definition of technical analysis is it's the study of trends and turning points. And VectorVest will define, is the share rising? Is it going nowhere on a hold? Or is it falling? Buy, sell, or hold. And we want to be able to put numbers to those three things. So let's start with value. As I say, every day, VectorVest puts a value to every share in the market. So you can see at a glance, or we can search for shares that are trading below their VectorVest valuation. A more important measure of value is called relative value. And this is a measure of the long-term price appreciation potential, and for long-term, 3 years. Relative value is a measure of the long-term share price appreciation potential over the next 3 years in relation to what a corporate bond will pay in the same period. A AAA rated corporate bond. So here's how we do that, and it's quite a complicated calculation. The calculation is fully revealed in Dr. Deleto's book, Stock Strategies and Common Sense, which you can download from VectorVest. We forecast the earnings of every company on the London stock market for the next 3 years. So we work out how much money it'll make next year, the year after that, the year after that. We do that by two ways. One, we extrapolate from the financial statements. And two, we buy an earnings forecast from a company called FactSet, which is the leading provider of such in the world. And I'm very impressed with FactSet. So we have a number for the profits this company is going to make next year, the year after that, the year after that. Now, we assume that in that 3-year window, those earnings will be discounted into the share price. In other words, if the earnings are rising somewhere in that window, the share price will rise. Those of you that have been in markets will know that they don't do it linearly. They tend to do absolutely nothing, and then they go. That non-linearity is a characteristic of markets that many people find frustrating. Nevertheless, that's the way it is. So within that 3-year window, we assume that those earnings will be discounted into the price. And we work out what the price will be. We take that projected price and we subtract the price today to get the upside. And we divide that upside by what a corporate bond will pay in the same period. Now, ladies and gentlemen, less than 1 is not good, because that would mean that the probabilities favor your share giving you less cash and less share price upside than what a corporate bond will pay. And if you understand the pecking order of how people get paid, you will know that the corporate bond holders get paid well ahead of the common shareholders. So the corporate bond holders get paid just after HMRC, should there be any problems. So RV of less than 1, you'd be taking a great deal of risk for less reward than you would get from a corporate bond. So that's not good. Greater than 1 is not bad. We're going to outperform a corporate bond. And we've found, and our subscribers have found, that a relative value of greater than 1.25, in other words, we're going to outperform a corporate bond by 25%, that will greatly increase the probability of capital gains in our portfolio. And our research department in North Carolina proved that. I've proved it, and one of our users, a very tenacious researcher, he'll be speaking at our national user group next month from Guildford, has shown that in all the VectorVest markets around the world. So the first qualification, ladies and gentlemen, of a worry-free stock is that the relative value must be greater than 1.25. And you can certainly, from the stock viewer, eyeball that, or later on we're going to use Unisearch to automatically find those for us. So that's our first characteristic of a worry-free stock. Now the second characteristic is relative safety. And in this particular presentation, I'm really going to focus on the safety and the predictability of the earnings, as this is a hands-off strategy. We want the ball to do the work. So on VectorVest, we have a measure of relative safety, which is an indicator of risk. It measures the consistency and the predictability of the financial performance. Now, in relative value, we project the future. And as Mark Twain said, the future is a very slippery commodity. In relative safety, we're looking at the past performance of the company. So this is an exact number. So we look at the balance sheet, the income statement, the cash flow statement. We look at dividend growth, dividend safety, dividend cover, free cash flow, all those financial ratios. And we suck them all in, folks, and we spit out one number on a scale between 0 and 2, like everything else on VectorVest, that represents the safety and the predictability of the earnings. Now, less than 1 is not good, because less than 1, this is a share that has got a dubious track record of safety. In other words, the numbers are up and down, in and out. It may not be making any money. Now, that could certainly be a great share for some short-term speculation. But as a vehicle for a hands-off, worry-free strategy where you can chill and let the market just work, it's not optimal. Greater than 1 is not bad. And ladies and gentlemen, for our worry-free strategy, we want to get the RS again to 125 plus. And on the London stock market, we've got lots of companies with a relative safety of 1.4, even 1.5, that have got a very safe track record in making money. And as a default, I'm going to sort all of the shares a little bit later in the presentation by relative safety to bring the safest ones to the top of the pile. Now, for our worry-free strategy, ladies and gentlemen, we're looking for some very special stocks. We're looking for stocks that have got the ability to grow their earnings and have a proven track record of growing those earnings safely. And on the London stock market, there's not that many of them. They are what I call sweet spot stocks, where we can safely let the ball do the work. The third proprietary VectorVest measure is called relative timing. And this is a measure of the short-term price trend. Again, on a scale between 0 and 2. Less than 1 means the share is falling. Greater than 1 means the share is rising. Exceptionally useful for short-term momentum trading. Not that much use here today. And then what Dr. Toledo did is that he put relative value, the share price appreciation potential in relation to a corporate bond, relative safety, the safety and the predictability of the earnings stream, and relative timing, a measure of the short-term trend, into a single indicator called VST, which is the master indicator. Now, if we were momentum traders, then VST is the best way to sort all of the shares in the market, and that's the default. But today, we're not momentum traders, we're hands-off traders, and I'm going to sort the market by relative safety. We calculate a stop loss for every share in the market every single day, and this is an important part of the worry-free strategy. Now, we have lots and lots of different stop losses at VectorVest for different strategies, and those of you that have been at this for a while will know that stop loss placement is absolutely key, both when you're right, when to get out, and when you're wrong, when to run for cover. Stop losses are difficult, and the VectorVest stop loss is based on a 13-week moving average, which is adjusted for the fundamentals of RV and RS. Now, if RV and RS are high, we widen the stop loss. And for our worry-free stocks, they are going to be high. And we're doing our best to keep the stop loss well out of the traffic, so that your share can simply move up the page without you getting stopped out half a dozen times and incurring brokerage costs and a great deal of frustration. Invariably, before a decent move, and as I said earlier, markets don't move in straight lines. They do nothing and then they just run. Invariably, before one of those runs, in a share with a high RV, with a high RS, it'll actually come back before going. And that's essentially a stop running exercise by exceptionally capable people trying to get themselves or their clients into the market at a really good price. And we had a situation, we have it all the time, but we had a situation some years ago, well, a year ago, where one of our chaps out in Oxford was a shareholder, big shareholder in JD Sports. And before a big move in JD Sports, the darn thing spiked back and went down below the low of the last 20 days, which is a very a place where many people would put their stop loss. So it was down there for about half an hour, but that was enough to actually stop an awful lot of people, including this young man, out. And I had a bloke on the phone in tears because he'd been stopped out before a 30% move. So the VectorVest stop loss is doing its best to be placed well out of the traffic, well out of an obvious place. Those of you that have been at this for a while may be able to put a stop loss at a better place. But nevertheless, the VectorVest stop loss is part and parcel of the worry-free strategy that I'm going to, it's well out of the traffic. And that allows your share to move up the page without you getting stopped out unnecessarily. And if you've ever read a book called Reminiscences of a Stock Operator, the hero, Jesse Livermore, not called that in the book, Jesse Livermore says that those men that can be right and sit are uncommon. And later in the book he says, the money's not made by the thinking, the money's made by the sitting, not by the thinking. So the VectorVest stop loss is doing its best to be carefully placed, to walk that very fine line between allowing your share to move up and protecting your capital. And it is a very, very fine line to weave. We put a buy, sell, or hold to every share in the market every single day. That can certainly be used for timing and for our worry-free strategy. When we get in, we want the share to be there on a buy or a hold. If it's below its stop price, we clearly don't want anything to do with it. So to summarize, we want an RV, share price appreciation potential over a window of 3 years into the future of greater than 1.25. We want the RS to be as high as possible, again, greater than equal to 1.25. And we want the share to be on a buy or a hold. And later in Unisearch, I'll put in some volume criteria. We want to be able to get into the darn thing. And more importantly, if we're wrong, get out of the darn thing relatively easily. So we're looking for some very, very special stocks, stocks that have got the ability to grow earnings strongly and safely, to let the ball do the work. And it's a great place to be. And if I was managing your money, those are the shares that I would look for. So if I go to VectorVest now, I'm going to explain. Those of you that are new will say, what's that? Well, there's a great deal of information on the front page of VectorVest. There's a good reason for that, because you can set up these little boxes to actually pretty much tell you what you want, so that you can actually see what's happening at a glance. But I'm happy to admit that when you see it for the first time, there's a great deal of stuff on there. If I look at viewers, I'm now looking at the VectorVest viewer, which is looking at all of the shares in the market, 2,077 that we follow in the LSE and AIM. And with VectorVest UK, VectorVest USA comes, VectorVest Canada, whole of Europe, apart from Scandinavia, and Australia. Lion Trust has been spectacular for us in VectorVest, and I've spoken about it most Monday afternoons for a very, very long time. It's trading at £22, and we believe it's worth £22. When we got into it, it was trading at half the valuation. However, ladies and gentlemen, it's fully valued today, but based on that window of 3 years going forward, the RV is 1.52. So many people question me about that. Here's the answer to that. If the share price stays at 22.25 and the earnings come in as we anticipate, then at some time over the next 3 years, that 22.25 is going to be significantly undervalued. So this RV would certainly say that Lion Trust is a worry-free stock. The RS is 1.46. Now on a scale between 0 and 2, that's really good. This is a company making money, and all those darn financial ratios are getting better. Short-term trend couldn't be better at 1.65. So immediately with these three numbers, we can get a good feel for the future. We get a good feel for the safety and the predictability of the earnings over the last 5 or 6 years. And we've got a good feel for the short-term trend. And what we've done is we've analyzed that stock, folks, in less than 30 seconds. And that's what VectorVest is all about. To give you information that you can react to without having to sit down and fight over the balance sheets and the income statements and whatever. A lot of people enjoy doing that. That's great. But I personally focus on what's more important, in my humble opinion, and that's managing the risk and just playing the game. There's the stop loss at £19.05. Now, I didn't get time to actually speak about this is CI, and the CI measures the long-term trend on a scale between 0 and 2. At 1.49, that's an excellent measure of the long-term trend. So both the short-term trend is up and the long-term trend is up. GRT is growth rate, and that's the percentage annualized growth rate next year at 28%. That's wonderful. And that's a big part of RV. So there's a bit of belt and braces between those two. If we go across here, we can see the earnings yield, 4.57. That's the profit divided by the share price. It pays a dividend of 2%. So the dividend is well covered by the earnings. And as you can see, DS is the dividend safety and DG is the dividend growth. So dividend safety goes between 0 and 187. That's great. And that dividend safety is a big part of relative safety. And the dividend growth is at 18%. So just by reading across here, we can analyze the stock in a few minutes. You know exactly what's going on. And what I've done is that I've replaced a very costly CFA charter holder. So I don't need those blokes. I used to, in fact, employ one of those guys, and he couldn't have traded his way out of a wet paper bag at a great expense, I may add. This is a share that I spoke about in my essay last weekend. I do an essay for the VectorVest Marketplace customers every weekend, and Focusrite I spoke about last weekend. I don't know if anybody read that, customers in the room, but its RV is 1.52, its RS is 1.45. Tis an AIM stock, and as you'll see in my little Unisearch, I exclude AIM stocks, but that researcher that I spoke about in Guildford, Mark Cowan he's called, he looks at AIM stocks in worry-free, and he's had a great run with them. As you can see, VST is 1.48. Long-term trend is 1.86, and the earnings growth rate is 33%. So let's have a look at the chart of this. If I pull up the chart, there's the chart, and as I say, I'm a technician at heart, but that's earnings per share growing, folks. This blue line is forecast earnings per share, and as you can see, over the last year, it's rising, and that's a big, big part of relative value. Now, as you can see, I've got a stochastic, which is when the stochastic goes down below 20, it's always a good place to buy a few. It's in an oversold. I'm going to take that off for a second. And I'm going to be speaking about this tonight at our national user group. There was lots of places. One of my setups I'm talking about tonight is what I call a rocket launcher, and that was a rocket launcher set up just here as it gapped out of this resistance area. The stochastic was giving us a buy signal just here, and of course those of you that are chartists will notice a cup and handle pattern just there. So that share has moved from 12 to 16 in fairly short order. And that's the power, ladies and gentlemen, of finding a company that can do two things: grow earnings strongly and has a proven track record of growing earnings safely. I use 3 moving averages. As you can see, there's the buys at the top of the page. There was the last buy signal just there. That would have been a great entry at 12, and it's gone to 16 in 6 weeks. So putting together the fundamentals with the technicals, finding shares that can grow strongly and safely, that are rising, is a huge edge in market. So you can use the VectorVest buy to show you when they're rising, or I use 3 moving averages, 21, 55, and 89. And all the VectorVest people will be familiar with that. And as you can see, this share has been north of that 21, 55, and 89 for at least 2 years now. So no great surprises. Earnings per share has gone from about 12p to 35p in that particular, well, 20p to 35p, 37p in that period. That's nearly double, and that's what's driving the share price. The share price is not going up by magic. It's going up because traders believe the darn thing's going to make more money next year than it is this year. It's as simple as that. I don't care how many algos and God knows what are out there. That will not change. So if you own a little sweetie shop and that shop's going to make more money next year than it did this year, then your sweetie shop is worth more next year than it did this year. So let's not make it too complicated. You can certainly look for swing trade entries, but in this particular methodology, we're going to do our best to try and ride these big trends. Okay, so I hope maybe somebody got that based on that essay that I wrote in the middle of last week. It's gone from 14 to 16 since I wrote that. So Cape Tech is another share. Cape Tech is RV is 1.72. Now, those of you that know me will know that I get excited about this. If I see an RV above 1.3, that's excellent. If it's above 1.5, that's bloody marvelous. And that really is one hell of a number. So we can see these coming out here. 1.72 and RS is 1.3. RT is 1.4. So we've got a share that's growing earnings strongly and safely, that's rising strongly on a buy recommendation. Long-term trend is soaring up at 1.58, and we expect it to grow earnings at 38% next year. We've analyzed that stock in 30 seconds. That's what VectorVest does for you. If you want to fight with the annual reports and the interims and Lord knows what, that's up to you. I know lots of people like to do that in the same way as I like scratching a spot, but nevertheless, the VectorVest program is pragmatically trying to make you money. If you want an intellectual exercise, then I think take a course at the Open University or something, okay? This is not that type of program. It's trying to show you how to build wealth, how to actually beat the market significantly. So we're going, now we have a lovely lady and she's going to be running our national user group tonight called Susan Thornborough. My word, she trades well. And she's got nerves of steel, and I've known an awful lot of fund managers over the years, and she can look them all straight in the eye. She doesn't look at Unisearch at all. She just finds them from the viewers, and those of you that have been to the user groups online or her physical user group when we met physically, that seems such a long time ago. She shows you how to do that very simply in a few minutes. But we're going to use this thing called Unisearch to find these automatically in a moment. Okay, so I need to go back to my PowerPoint presentation. Is any questions on how to analyze a stock in 30 seconds? First of all, we've got a crowd from all over the world, guys. It's really great to see you. Okay, no questions on that. So this is without a doubt controversial. How to determine market direction. And many people will say that it can't be done. The VectorVest mantra is buying rising stocks and rising markets. And clearly on another day, if I was doing a more aggressive trading approach, selling falling stocks and falling markets. And just remember, folks, that when you get close to the noise, it becomes much, much more difficult. Now, if you don't believe me, just have a go. And if you look at IG stats, they tell you that 80% of people lose money. So the noise is difficult. You're dealing with one, randomness. Two, you're trading against exceptionally capable people. And three, you're trading against the algos that have been programmed to take advantage of all of your emotional biases that exceptionally capable Nobel Prize winners have given names to, which I always forget. So we're in this presentation, we're doing our best to stay well away from that, to stay well away from the short-term noise. Dr. Bartolito says the direction is the key to making money in the market. Being on the wrong side of the market is the worst thing that can happen to an investor, but it doesn't have to happen to you. I firmly believe that the most important thing to know is whether the market is rising or falling. Everything follows from that. And when I say the market, I'm talking about the sentiment of the overall market. And it's so easy to ignore it. And that's my very simple metaphor. I haven't been on one of these things in 45 years, but when I was last on one of them, they take forever to get up and they fall very quickly, just like a market. Has anybody been on one more recently than 45 years? So I can't imagine much has changed. Now, that's the front page of VectorVest. And I'm going to go out of my presentation now, and I'm actually going to go into the program itself because it's a wee bit bigger. So if we go back to the front page where you can see. Now, I'm running a bit late, so on VectorVest we have many market timing systems. And the market timing is based on the VectorVest composite, which is our own index of the 2,200 shares that we follow. It's an equally weighted index, not a market cap weighted index, because we believe that an equally weighted index represents the sentiment of the market much, much better than a market cap weighted index like the FTSE 100. Now, the two most important words on VectorVest, I believe, are these two: up and up. The first word represents the short-term trend of the London market, and the second word reflects the underlying or the longer-term trend of the London market. Now, sometimes that confuses people, and I like to put it across like this. Like two boats, a big one, a little one. I think you would agree that the little boat can duck back and forward easily, whereas the bigger boat takes much, much longer to turn. The difference between a small boat and an aircraft carrier. And similarly, the measure of the short-term trend can move back up and down and reflect short-term changes in the VectorVest composite, whereas the underlying trend is much more stable. At today, based on last night's data, the short-term trend is up and the underlying trend is up. Now, what's this thing on the right-hand side is called a confirmed up. And the confirmed up is the longest term measure of the trend on VectorVest. And the confirmed up is no more than the underlying trend, the second word, confirmed by 2 weeks price action. And it's in fact not calendar weeks, 2 5-day price action. So 2 5 days in a row. Our objective is to be fully invested when there's a confirmed up in place. And the confirmed up has been in place. I'll show you the signals over the last couple of years in a second. Okay, John. So the traffic light represents the strength and the momentum of the short-term trend. And for permission to buy stocks, in our worry-free strategy, we want a confirmed up to be in place, and we want this pointer to be in the green, telling us that the short-term trend is strong. In other words, both boats are heading in one direction. So we want the longest term measure of the trend, the confirmed up, to be in place, and we want the short-term trend to be moving strongly in the same direction. Couldn't be simpler. And that, in fact, was something that we decided, and one of our members, in fact, from Wales, came up with that. Carwyn, I don't know if you're in the room or not today, Carwyn. Thank you for those charts earlier, by the way. So let's just look at this. Now, if I click on timing, and I go to the market timing graph itself, that's the VectorVest composite. And if I go back pre-COVID, there's COVID, God bless it. Now, down at the bottom, we've got a drop down of all of the VectorVest market timing systems. Confirmed calls is the longest term measure of the trend that I'm going to use for worry-free. Primary wave is a very short term, that first word. The DEW, I'll spare you the acronym, is a medium term market timing system that I use for swing trading. And these all three are three different market timing systems. And if you read my essay this weekend, folks, I've gone through these again in the essay that you'll be getting on Saturday morning, those of you that are customers. If I click on confirm calls, it populates the chart with red and green triangles, and those are the confirmed up, and these red ones are confirmed down. Calvin is in the room. Now, when we have a confirmed up in place, we want to be fully invested, which I am at the moment. Now, we had a confirmed down last October. That was the first signal after the sell-off last February, March. There is a confirmed down and then another confirmed up straight away. When we get a confirmed down, do nothing, but don't buy any stocks. Watch your stop losses really carefully. Now, when we have a confirmed down in place, it's pretty much the only time that you really need to be quite diligent on your stop losses. If you see a share closing in your portfolio, closing below the VectorVest stop loss, then simply get rid of it and build a cash position. Now, in these two pullbacks, we weren't stopped out of anything. The high RS stocks tend to be very resilient. In this sell-off, I was stopped out of everything. And that's the first time that that's happened since 2008. And as I keep telling to VectorVest members, on the next confirmed down, we don't know whether it's one of these or something like that. And that's why when we have a confirmed down, no more purchases. 2, watch your stop losses very carefully indeed, and don't hesitate on those stop losses if we've got a confirmed down in place. And thirdly, you may want to look at your portfolio in a confirmed down situation, and if a stock hasn't performed on the way up, then there's precious little chance of it performing on the way down, and maybe you want to raise some cash for the next buy signal. So that's the process. The process couldn't be simpler. Largely, apart from one share, Avon, we're in the same shares that we got into last April. Now, high RS stocks rarely drop the ball. We had one that dropped the ball on us in the last 15, 16 months, and that was Avon. Avon Rubber, now called Avon Protection. And as you probably have read, their masks or something had a technical problem, and the American Army turned them down. So they say that they're sorting those problems out, but that hasn't helped the share price since. It fell another, got a big smack the other day, and it was down another 5% yesterday. So high RS does not eliminate surprises, but it minimizes them. So when we have a confirmed up, such as we've got at the minute, we want to be fully invested. And I am. When we get a confirmed down, just be very careful. No new purchases. And then it's really important that you watch your stop loss, because we don't know whether it's a nice little pullback that's going to come to nothing, or whether it's one of these. Nobody knows. There are people on the internet that will charge you many thousands of pounds or dollars for some course that will tell you, but they don't know. I assure you they don't know. So that's the process. So let's find some stocks now in Unisearch. So if I go back to my presentation, we're going to use Unisearch, and I have a search which is written on VectorVest that you can use. Unisearch, you can do all sorts of searches, and those of you that come to our national user groups will know that we have a guy called Mark, who's an absolute genius on Unisearch, and he'll be speaking tonight. And in fact, he's taken some of my patterns and found searches for them, unbelievable searches for them that we'll be presenting this evening. So the key to worry-free, folks, is finding those sweet spot stocks that have got the ability to grow earnings strongly and safely. Okay. I've tested this till I'm blue in the face up until about 2016. And then I said to myself, David, at well over 60 at that stage, you're too old for back testing. This must go forward. So I've been testing it forward with my own money. And it's been a great time with virtually no work. The key is that relative safety. Certainly for a hands-off strategy, the relative safety is key. If you're a momentum trader, if you're a swing trader, then certainly relative safety not nearly as important. RV is incredibly important. But for this hands-off methodology, we want shares that can grow earnings safely. And that's a great place to be. That's the little search that I've got. Couldn't be simpler. You should see some of Mark's searches. This just couldn't be simpler. I'm looking for the share price to be above 50 pence. That 50 means 50p. So at the moment, we're excluding all those 2 and 3 and 4 pence shares on AIM. The stock's volume, 50,000 shares traded per day as measured by a 50-day moving average of volume. Now, that's very low. And if you were to start with £1 million or something, it'd probably be too low. I'll certainly work with you to help you on that. If you're starting with a few £1,000, then that's fine. In this search, that little double arrow means not, and I'm not on AIM. But as I say, Mark from Guildford is using stocks on AIM, and he's had a really, really good run with stocks on AIM. The RV should be greater than 1.25, and the stock's recommendation should not be a sell, and by inference that means it's either a buy or a hold. I'm going to sort those shares by relative safety, so it finds a lot of shares, brings the safest to the top of the pile. I'll run the search for you in a moment. We're going to use our confirm call signals, and remember, we're going to get in when the confirm call is up, and the little pointer on the front page of VectorVest is pointing into the green, and it's saying that it's safe to buy stocks. The short-term trend and the long-term trend are pointing the same way. That's the VectorVest composite, and that's what it's done since last April to last night. We have won, and we should never have taken a 26% loss in Avon. Nevertheless, if you'd sat through it, the rest of the portfolio is more than helped. The market's up 39%. It's been a good time. There's no doubt about that. But the this portfolio is up 68%, excluding dividends, folks. And most of these have all paid a very healthy dividend along the way. As you can see, Lion Trust Asset Management, 122%. Okay. Ash Head, 182%. Since last November, no losers, and the market's up 17%. This is up 27%. That's what it did in 2019, did 48%. From the first signal on the 9th of January. So those of you that are short-term swing traders, folks, and are worried that this is actually not aggressive enough for you, I know an awful lot of short-term traders. I mean, I know hundreds of them, and I don't know many that have made 68% in the last year by doing nothing. Most of them are sitting in front of charts all day, every day. And most of them are losing money in the noise. You've got to be very, very good to take on randomness chaps in the city that have been doing this for 30 years, and the algos that have been programmed to nail you, every emotional bias that you've got. So staying out of the noise, and certainly, as I said again, if I was managing your money, I would put 80% of it into worry-free, and with 20%, I'd probably have a go at some momentum trading. And that uses the DEW, and that's a completely different webcast. So that's, unfortunately, in February 2020, when COVID hit, I got stopped out of everything, and I gave back 16% there. So from the start of 19 to March 2020, I was up about 30%. So I got out of COVID being up 30%, which I was very happy with. So that's the first time I've had to get out of everything since 2008. That's 2019. 2019, folks, it was 2 trades the whole year, just there. Got stopped out of 2 shares there. Had to buy back in there when we got the next confirmed up. And it ran to the end of the year. So there's virtually nothing to be done. Now, you can set VectorVest up to give you a email. If you're in the US, or out of the UK, should I say, then you can tie VectorVest up to a broker, and it will do it for you automatically. But in the UK, we can't offer that because the FCA say that that would be financial advice, and we're not authorized at that level, and it would cost us a fortune to be authorized at that level. I mean, 6+ figures to be authorized at that level. I've tested this in the US up to 2016, over 20 years, all sorts of market types. And that's what it did. It actually made, over that period, 17%. Plus a 3% dividend yield. Writing this pen's more difficult, it looks. Not easy, folks. There's 2000 to 2003. Okay. That's the global financial crisis where we got stopped out of everything. That's the Euro crisis where we got stopped out of half the portfolio. And since 2016, of course, the American market has absolutely roared. May it last. Certainly, we're due a confirmed down again. Whether that's going to be a big one or not, I don't know. And I think we'll get an answer to that at Jackson Hole in a couple of days' time. But with the retail sales figures out yesterday, plus the consumer sentiment that came out last Friday, I can't see Powell changing his mind now. So I think the QE will keep going, and I think we'll have more on the upside. How long it'll last after that, I don't know. But that's my stomach talking, folks. I shall not be trading my stomach. I shall be trading what the VectorVest signals tell me, okay? So if you're wondering how to put this together, you can try and do it yourself. I failed. I just couldn't keep the annual reports and up to... I remember them vividly piling up in the corner of the office. I just couldn't keep them up. So to break out, I'm sure that you've realized I've got a plan. So if you roll up your sleeves for 30 days, and I don't care whether you're a market expert or whether you're brand new, we can show you how to put this together. And I put together a course. It's part and parcel of VectorVest. And I'm going to run you through it. There's 5 bits to it. The first bit is how to analyze a stock in 30 seconds, which is the real detail of what I spoke about earlier. So that you'll be able to sort the good ones from the bad ones very quickly. And then focus on what's really important, which is managing the risk and playing the game, doing what you should do, letting your winners run, cutting your losses quickly. Second module is all about risk. All about position sizing, maximizing your winners, minimizing your losers. So sort the good from the bad in number 1, getting rid of the bad in number 2, and then number 3 is when it's safe to buy. When is it safe to buy? And module number 4 is what to buy. Some cherry-picking checklists, of which the worry-free is one. And then a 10-minute management plan to simplify your day. Now, in the States, they charge $475 for that. But if you roll up your sleeves and you work with me for the next 30 days, folks, it's normally £5.95, but there's a summer sale on, and if you click on that link, it'll take you to the 99p offer, 99 pence. Can you believe it? So VectorVest.co.uk/proven. Good question. David says, how should you get into this portfolio? Big bang in one day. David, there are many ideas in that, but when you get the confirmed up, these signals tend to last for many, many weeks at a time. If you bought 2 shares a day, we reckon you should be holding 10 to 15 stocks and manage them well. 2 to 3 a day, David, so you're full over a week with that order. Very good question, David. Thank you. We go through that, all of that in the little course, David, in a great deal of detail. That's what I do anyway. So VectorVest.co.uk/proven. It's 99 pence. That includes 30 days access to VectorVest World. That's the UK, USA, Europe, Australia, and Canada. And that's worth £49. Now, after the 30 days, if you see value, and only if you see value, then it's going to be £49 a month. All right. You can stop it at any time. You can stop it after 30 days by one email / telephone call. And in 10 years working with VectorVest, we've never had a problem with a credit card. Greg, just remember that it's 1% risk, not buying 1% per share. We would want, in other words, divide your portfolio up into 10 bits, Greg. So you're putting 10% into any one share, and then resolve not to lose any more than 10% of the 10%. There are many ways to do it, but if you just did that, you'd be fine. And over the 30 days, I do a webcast every Monday. We have a national and an international user group that you'll be invited to. And of course, you get a 0800 number that takes you right through to our call center. That's in North Carolina. It's a free call. Okay, so lots and lots of support. I'll show you where it is in a second. Lots of people have done it. This gentleman's a farmer from North Somerset, and he's been in the market for years, and he's never made a cent. He's always been buying at the top and selling at the bottom. So I finally got him right. He tells me he's even got a written plan. So I haven't seen it yet, but he tells me he has. So if this is in the program, it's built into the program. So I go back into the program, I'll show you where it is. Although new people will get an email training, and there's the course. Okay, 30-second stock analysis system, weed your portfolio, market timing, what to buy, and then this little plan to put it all together. And then this is a webcast on various techniques that people have used. In terms of working out what button to press, there is a very complete navigation series that opens in a different window. And if the internet, there's a lot of stuff open. If the internet doesn't let me down, there it is. Everything you would ever want to know. This is done by a great guy called Glenn Tompkins. He also does a webcast on a Thursday for everybody. And as you can see, for example, on Unisearch that I spoke about, there's 3 sessions on Unisearch here. Okay, and how to backtest, all right, how to run the portfolio manager, which I didn't get time to get anywhere near. So every question you ever have on VectorVest is there. Okay, simple as that, in that navigation series. So let me go back to my PowerPoint presentation. That is the VectorVest.co.uk. If you click on that link, it should get you through to a 99p offer. Cordelia, I'd be happier if you spread yourself across the market, at least 6 to 8 shares, Cordelia. I really would. And you don't have to buy heaps of them, but much better to buy a few. That makes some sense. So any questions, ladies and gentlemen? I look forward to working with you. And if I can help in any way, it's david.paul@vectorvest.com. Yes, Greg, you've got it already, for sure. You've got it already. It's on your VectorVest. So I didn't say hello to those people that are listening on YouTube. So welcome to you. Throat's a bit dry. I'm sort of live on San Pellegrino. The people on YouTube can see me. That's why I have to. Peter, thank you. And folks, if there's no more questions, I'll sound off. Just remember, the worry-free methodology looks for the UK's safest shares that have got a history of growing earnings strongly and safely. And we want to buy them when the general market is rising. When the general market is falling, we want to be very careful. We want to watch our stop losses very carefully. We certainly don't want to buy any more stocks. If we get stopped out of one stock in a pullback when the general market is falling, then we'd be 90% in stocks, 10% in cash. When we get the next confirmed up signal, we run our little search again, and we replace with the share that we haven't got. Very simple, very straightforward, and it works. And it's where my money is. Thanks very much, folks. Take care of yourselves. Those of you that are VectorVest subscribers, I'll see you hopefully at our national user group tonight. Susan Thorne will be running it, but I'm presenting a little bit on 3 trading setups towards the end of the presentation tonight. Bye-bye.